You fucking kidding me? You gave your AI permission to overwrite code in the internal file system? Or are you gonna tell me about this?
No. I thought that was the company policy these days.
Okay, well, your AI just failed epically.
That's unclear. It's possible that Son of Anton decided that the most efficient way to get rid of all the bugs was to get rid of all the software, which is technically and statistically correct. But artificial neural nets are sort of a black box, so we'll never know for sure.
Hey, Richard, did you order meat? Like a bunch of meat? Like 4,000 pounds of meat?
Interesting. I put Son of Anton on finding us cheap hamburgers for lunch. It looks like the reward function was a little underspecified.
Okay, from now on, Son of Anton is banned. Just write code like a normal human fucking being, please. Are you fucking kidding?
Good morning. Silicon Valley was way ahead of its time. I hope everybody is having a good start to their day. I hope they enjoyed a really boring Super Bowl. We've got a lot to talk about this week. We've got, as I said before, there's the first 5-day rule of the year. That was positive. That's good for markets. Then there was so goes January, so goes the year. That was good. And we had this huge drop last Thursday and then this huge pop last Friday. And I think it's reiterating that we have a lot of upside potential, at least within Bitcoin. Maybe metals are a little toppy. But I think that looks good. We have Clarity Act. We're going to have the government meeting with a bunch of people, the banks and everybody meeting in order to be able to try and hash out some of that tomorrow. And then there's a housing bill that they're looking to have passed the House. So there's a lot going on right now. And we'll talk about all of it real quickly here. CNN Fear and Greed Index is just barely in fear, sitting at 44. And then the coin market cap version of the crypto Fear and Greed Index is at 9 extreme fear. So this is all pretty deep. We'll probably watch a video here in a little bit in regard to FundStrat, just a technical one from Mark Newton. Real clearly here too, 78 companies are reporting this week for earnings. Of the 294 that have already reported so far, 59% of the S&P 500. Overall, 79% are beating estimates, and the median beat is about 5%. That's a pretty good number. Percentage-wise, I think we went up a little bit, and then the median percent went down just a hair. I think it was 6 when we started off the month. With earnings, of the 21% missing, they're missing by about a negative 3%. This is all good. On the top line, overall estimates are beating by a median of 3% and missing by a median of negative 2, and 73% of those reporting are beating estimates. So all of it looks really good as far as earnings go. But again, we'll probably look at a little bit of the technicals here in a little bit and see if Tom Lee has a new video. I have not seen one, but if he does, we'll jump into that in a second too. Economic calendar, nothing really today. The only thing today, consumer inflation expectations. I don't know how helpful these actually are, but we've got that coming out at 10. And then we've got a bunch of Fed speak. We got Waller, Moran, maybe twice, and then Bostic. So I don't know if they're going to create any kind of turbulence in the markets. I really can't think of any that could be problematic. I think the market kind of has a free pass today, so we'll see what it wants to do. Does it want to continue what we did on Friday? Or does it want to take a breather? It has run really, really hard. Companies like Enphase, I was up 70% on that position. I did cash out a bunch, pretty much all of it, to be able to buy the crypto drop just because it was so steep and Enphase was doing so well. So I was able to capitalize off of, the really good price action on that to be able to buy the dip, which was wonderful. Now, as far as economic data, tomorrow it will pick up a lot. We've got the NFIB. I should probably get over to chat here too. We got the NFIB Optimism Index coming in. We got ADP employment weekly changes. We've got some quarterly data for employment costs, benefits, and wages. That'll be interesting to see. We want to ideally see wages going up. We got export and import prices, retail sales, just a bunch of different data points and inventories. Total household debt should be kind of interesting. So again, tomorrow is when it'll really ramp up in regard to economic data. And if you didn't see it over the weekend, Truflation had a 0.67 or something, I believe, score. And we're going to show you a bunch of charts. I've got so many charts today, guys. Let's see. We were talking about Bad Bunny. We were talking about Super Bowl sucking. We were talking about how it would have been more fun to have Metallica there. I would agree with that. And let's see here. Angel says, "What's up, Jesse? Glad to see you. Wish you were on 2 to 3 times a week." Yeah, I know. I get that a lot. But honestly, man, I like the 1 day a week. It just makes it to where I'm able to just, populate or accumulate everything and then just aggregate it, clean it up, and get it out once a week and not just be repetitive. I feel like talking about a lot of the same concepts over and over again. But if you guys could hit the like, it'd be greatly appreciated. We got a wake up chat. I think a lot of people are sleeping in today, probably from the Super Bowl. Wall Street Mav, I am not a math genius, but canceling 6 million H-1B visas and 1 million student visas and deporting 20 million illegal aliens would probably make housing prices and apartment rents cheaper. Yes, if you do that too quickly, though, that could be bad. But I do think that's one of the key things that we're seeing with this Trueflation data. We're seeing shelter come down a lot, and we're seeing demand come down a lot. We're actually seeing chip companies like Doritos and all this other stuff, their prices are going down because the SNAP benefits don't cover junk food anymore. So it's just really interesting to see some of the deflation that's going on in the economy. I did want to speak to this, though. Kevin Warsh last week, I told you guys he wasn't a hawk. I told you he was a dove. Everybody took him as a hawk right away. But I think they started figuring out the truth. I like this post from Lucas. So there was this post from Bloomberg over the weekend. Warsh call for Fed Treasury accord stirs debate in $30 trillion bond market. And essentially, again, they're starting to realize that hey, maybe he's more of a dove. And I'm going to show you some cool charts on that too, from 4-year terms and presidency and just a bunch of other data points. But Lucas said, Warsh, the next Fed chair, will inflate the debt away. He's in favor of yield curve control. I've been talking about yield curve control for a year. I just want to be very clear on that. This was always going to happen. It was a part of the new Monroe Doctrine and the accord that we're trying to build. This was always the game plan. I don't know why people didn't read Stephen Moran's write-up on this back in the day, because it's literally what we've been following. And they said this is what we were going to follow. So it's just funny that some people are coming to these things now. Anyway, this means pegging U.S. short-term interest rates to an artificially low level. Yeah, to be clear though, to control the short-term rates, to get them lower. But more importantly, a lot of the yield curve methods that we're going to use, like buying back the mortgage bonds, the $200 billion, that's to do it at the longer end of the curve so that we can affect things like mortgage rates. So you can hit these on both sides of it by lowering issuance on the long end of the curve, by buying back some of those, like with the mortgage bonds. And then also, again, by buying the short end of the curve, you can kind of pull the whole thing down and kind of get it where you want it to be. And I think that's going to be a major focus. He put, this would be reminiscent of World War II. He's right. Back then, U.S. debt to GDP was 125% versus 121% now. I actually think we're a hair lower than that. But I do agree with him there too. He said yield curve control enabled the government to borrow vast amounts of USTs without blowing out interest expense. Again, we're trying to get our borrowing debt costs down. We want to provide a ton of liquidity to the market. We want to do it through loans and let the banks do it, especially small banks, because they know their regions really well. They know their cities well. They know the companies that are the people that will make good companies and that won't default on debts, and that are just, again, at local levels, you can judge these things so much easier. And that's what we want to do. We want to flood the economy with loans that they can get at cheap rates or refinance to lower their expense base, and then benefit from, again, growing, building out CapEx if you're a business, buying a house if you're an individual, just making it to where people can live their lives and we can grow our economy. And we're going to use yield curve control for that. We always were. Those costs were pushed onto citizens via inflation. He's talking about then the cost of this was inflation. I would argue that we don't have to worry about inflation right now because of all the things that we're doing to offset that. And again, I think inflation comes from money printing. It doesn't come from, as quickly at least, as banks lending out. You're increasing money supply in there just through debt issuance, but it's just a different mechanism for doing it. And then the growth usually offsets whatever you're doing as far as an inflation that you're creating, and wages go up. So you want all these things. But he said from 1945 to 1980, the U.S. gradually brought debt to GDP down to 30%, which later enabled Volcker to raise rates to 20% to kill inflation. This seems to be Warsh's playbook. I don't think we're not worried about inflation. It's way different. I think that's the part that this guy has wrong. This isn't something where we're looking to ramp up inflation by a lot. We're looking to keep it down. And there's ways to do that. Again, deporting illegal immigrants, just like we saw in that last post. Huge way of doing that, because again, you're taking away this multiplier that we've been adding for years while we were printing a ton of money. 40 to 50% of the money supply printed since the pandemic that ever existed in this country's history. If you're doing half the money supply, you're going to get inflation. But when you start deporting people that were coming in, that were raising up shelter costs and food and all this other stuff, it's going to have a deflationary impact, and we can see it happening today. Inflating the debt away was always the plan. Needless to say, hard assets outperform. I don't like the term inflating the debts away. I think growing our wealth quicker than our debts is the play, and I think that's one thing that people are missing. Let's see here. Art and Andrea, maybe. Good morning, everyone. Warsh, Besant, Drucken, Miller trio is not one to bet against. Bottom line, trust Scott Besant. I 100% agree with that. There's a great article here from Andrew King. It talks about the exponential horizon. I know Raoul Paul posted this too. It says, doesn't look like a hard takeoff. Yeah, pretty normal. And then it says you're here, and then it shows what's going to happen next. But there's just a couple of points that he made that I thought were good ones. He put the exponential horizon. For those that haven't experienced at least one market cycle, you build an instinct to be wary of price appreciation that greatly outpaces the historical rate. Seeing the dot-com bubble, the 2008 great financial crisis, all the crypto booms and busts, builds pattern recognition warnings in your brain. Yes, I agree with that. And I've been through all of this. I was interested in investing and watched my dad do it during the dot-com bubble. I lost a fortune and went bankrupt from 2008. Didn't know what options really were and how they worked. Learned the hard way from that experience. And then I've been through Bitcoin and crypto cycles going back to 2017 when I originally got in. When Bitcoin, I got interested at around $1,700. But I bought a bunch of mining equipment and built out over 6 figures of mining infrastructure, and even had a warehouse. So I've experienced booms and busts. I've been involved in this stuff a lot, and he's right. You get a pattern recognition when you're overextended. You start to know what it looks like, and it looks like a lot like what gold looks like right now. If we just pull this chart over, it looks a lot like this, and gold's trying to creep above this first fib retracement. That's what we're looking at right here, is a fib retracement level, just going down to the last consolidation zone. And so it's trying to get above this. We'll see if it can. It does kind of look, if we can't move quickly and break up here and start moving, it does kind of look, and we got a ridge right over here. It does look like it's like a rising wedge, or maybe even a bear flag that could form, that could just kind of grind over here and then drop down lower and test lower. So I don't know. I don't know if gold's going to do much, but it is applying pressure to crypto and other things in the meantime. Look at this hash rate, guys. It went all the way down to here, just crazy levels. We're going to talk about some of that too. Got a lot of stuff in the Bitcoin section of this conversation today. But he said all the crypto booms and busts builds pattern recognition warning alarms in your brain. You don't want to enter the market because it's too high or want to sell what you have. It's important to recognize that we are at one of the most profoundly unique asymmetric moments in history. The only move right now is to lengthen your time horizon and abandon short-termism entirely. Being overly concentrated about or concerned about bubbles is foolish. Trying to time the market is foolish. Short-term fluctuations and corrections will always happen, but entirely noise. Since we're in such a close reach of the singularity. And I'm not going to read all of this, but I 100% agree with him. We are advancing at such crazy rates, and this is just one of the charts that he's showing. Just the rate at which the time horizon of software engineering tasks different LLMs can complete 50% of the time is just nuts. We're definitely in an exponential age. And so one of the things I'm trying to focus on, I was deleveraging last year. Wish I would have done more of it sooner. But it is what it is. But this year, I am really not focused on leverage. Maybe with a hedging opportunity like TLT, and I've still got some ARKG, probably more of that than I should have. I'll look to de-risk some of that as well. But I'm not looking to add more. I think you need to have a strong time horizon right now. You need to be looking out a year or two or more and thinking about accumulating and just finding the right companies, honing in on them, finding the right investments. And again, if Bitcoin goes up to $200,000, $300,000 or something, and it gets to a crazy number and it looks like a blow off, kind of like what we saw in gold recently, then maybe lighten the load. But I think you need to not focus as much on trading, not focus on margin and leverage of any kind and option contracts. unless you're just doing it with small amounts strategically for something that you think is really asymmetric in nature, because I think buy and hold is the winner in the future. I just wanted to touch on that point. Yeah, again, new accord moment. Warsh, Druckenmiller, Besant. When I first floated the idea of a renewed accord in the Fed Treasury akin to the pre-1951 dynamic, the reaction from Wall Street researchers was predictably skeptical. Likewise, when I argued that Warsh would be an ideal Fed chair candidate and that his alignment with Druckenmiller and Besant made such an accord plausible, the notion was met with the usual hand-waving. Now that Warsh himself is publicly advancing the same idea, the street appears, as usual, to be arriving fashionably late. I did not understand this about Warsh before. I did not know him well, but I do know Druck and Besant, and I love what they've had to say. And I've probably watched 10 hours of video from Kevin Warsh since finding out about this, and he is brilliant, and he is very much in alignment with what this administration is trying to do. Treasury Secretary Scott Bessent pushes for Kevin Warsh Fed chair nomination hearings to proceed, despite GOP blockade over Department of Justice probe into Powell, Bloomberg reports. I don't know why we're trying to block and prevent an investigation into Powell. Powell has been absolute shit with his job. I'm trying to figure out how he was spending billions of dollars on a couple of buildings that were a palace for the Fed. Not a good steward of America's money. So I just don't understand. But I'm glad that we're pushing forward on this and that we're trying to confirm Warsh. I think that needs to happen quickly. Kobayashi letter said, we now have one U.S. president with a $100,000 price target on the Dow, or 100,000, sorry, not price, not dollars. New Fed chair who is required to cut interest rate. That is true. I mean, that is his goal and objective, right? He's got two. He wants to lower the balance sheet. People seem to think that was hawkish right away because he's going to do that with a hammer. They thought the same shit about Scott Bessent. They thought Bessent was, because Bessent previously had talked about how issuing shorter dated treasuries was such a bad idea. People thought he was going to immediately come in and start issuing long dated treasuries and bond issuance, and he didn't do that. And because again, he's not a fucking idiot, and he realizes that yes, it is a bad idea to do it over the short term, but we have to have rates down if we're going to do long-term debt issuance. And he's right. And now he's got the guy who's going to be confirmed here in order to be able to make that happen. So again, and that guy is not going to right away unload the balance sheet. Warsh is not going to do that. He's going to be strategic about it. He's going to lower the balance sheet as we're lowering rates and as lending is picking up and as we're growing our economy. He's going to do it the right way. But yes, we're going to use yield curve control. And then he said here too, and he said $2,000 stimulus checks back in discussion. I think that happens by June or July this year. U.S. government buying $200 billion in mortgage bonds, again, to pull down interest rates on mortgages. New $1.2 trillion funding bill signed into effect. Trump saying USD is doing great after it drops 10% because, again, he wants it weaker. And Kobayashi says own assets or be left behind. The dollar is an ice cube that is melting like crazy. I agree with that. Big news today that jacked up the bond market. TLT is down 0.75%. It did so good last week. One day it was up 1%. The options contracts were up 25% on average on that. So 25x versus the underlying move. So it shows a lot of pressure, I think, in TLT to want to go higher, the 20-year bond. But today, this stupid post or communication from China saying that their banks need to lower their dependency on U.S. dollars and sell off some of their treasuries and bonds is just really dumb. But people thought, oh, hey, they still have 600 plus billion of our treasuries. This is bad. Well, they're talking about the Chinese banks. The Chinese banks only hold 298 billion, and they can only unload so much. So if they're doing 100 to 200 billion max, I mean, they've already been eroding this away for a long time. If you just look over here, since the pandemic, shortly after, they were sitting at what, over $1 trillion, almost 1.1 trillion. And then again, now down to 298 billion. It ain't much, right? Like it's not a lot, and it doesn't really matter, but it's making noise today, and people like noise. Let's keep going. On that same note, foreign investors now hold a record 9.1 trillion in U.S. Treasuries, 4 times higher than the levels seen in 2005. This number has more than doubled since 2020. So again, narratives about our bond market being weak and everybody wanting to run away with it seem kind of dumb when you're seeing that we've added $4.55 trillion in overseas purchases of our bonds just since the pandemic. And I just said this is purely political, what they're doing with the China thing. I don't know if they're trying to use it in negotiations for trade. Whatever, it doesn't matter. Craig Fuller, I love this guy. He is freight affiliated, founder of Freight Waves, Freight Market Intelligence, Sonar, High Frequency Freight Data, Firecrown. He talks about freight all the time. He is everything with freight. I love listening to him. He just posted this. He said, industrials are manufacturing earnings beats. So what he's saying here is that this Ryan Detrick said, industrials Q4 EPS is 23.3% currently positive. It was expected to be negative on 12/31/2025. What the fuck? So again, industrials right here looking sick. And this is just a great thing. It shows that our economy is picking up, and it shows the story that I've been talking about where manufacturing is going to start going higher is picking up. Japan just had an election. They had a shotgun election here, and with that election, the conservatives won massive majority in that country. Their Nikkei, their stock market, just screamed higher, as so did the yields within their bonds. Their 10-year right here, you can see going up again to higher levels. But again, we're not worried about the Japanese yen carry trade. That's not really a thing that has to worry, where you have to worry about unwinding anymore. So it's just really kind of a non-issue. And we're working with them to ensure that they have plenty of U.S. dollars. We've got this commercial that played last night about the Trump accounts. I thought it was really nice, and it barely had Trump's name in it, which I think shows that he's starting to realize that he needs to market things a little bit better. But let's listen to it real quick.
Dear America.
If I start investing when I'm 16?
9, 7. It could change my future. All our future. I want to be a nurse.
Go to college.
Be a businesswoman. I can save for a house with a trampoline. 2 trampolines.
This year, every American child gets an investment account, and millions will be pre-funded. That's free money.
We can all experience the American dream. Sign me up.
I mean, look at that. Barely says Trump on it. Pretty impressive. But yeah, I think that's great. And again, Zero Hedge here seemed to agree with this whole Warsh Fed Treasury Accord STIRS debate, that it's a 12 out of 10 on the dovish scale. So saying that, again, he's very dovish. Let's see, how's Chad doing? I want to keep my clean spark and sell options against it at a certain point, roll them and when in a little danger. All right, well, good luck, man. Hope it works. Sean, great advice on no leverage. Yeah, it's just right now, man. I just think it'd be a shame for people to blow up their accounts right now because they're greedy, or they're trying to make up for losses that already happened when you're so close to just like what I believe are going to be some of the most epic years in investing, especially if you're invested in the right things. Andreas Steno Larson, my buddy here, he said nothing in the U.S. equity market is priced in for an ISM greater than 60. He's making a comparison here with South Korean exports. Exports from South Korea usually are tied in with what is happening. If you look here at the trend lines, they're almost perfectly associated with the U.S. ISM manufacturing PMI. And so all he's saying is if Korea's exploding, what's going to happen when we have an ISM above 60 in the United States? And it's going to be huge. And I agree with Andreas. I wish I could have met him. He came to the U.S. here just a week or so ago. But I think he was in New York, and there ain't no way I'm going to New York. It's just too far away from the Midwest. Last minute, but he's a cool guy. I would love to meet him sometime. He also said AI makes things cheaper. Software demand for these things goes up equals more jobs potentially. Jaban's Paradox 101. I agree with that. Again, people don't look at this, but if you have growth, you might have some initial rejection or have some jobs that are getting cleaned up because of AI. But as those companies become more efficient and their productivity increases and their growth increases and the product offerings get better, and again, just all these things happen, then they can afford to do more hiring because they're growing. And so it's one of those things where, yes, we will have an initial reaction where we could see larger numbers of loss in the jobs market, but it doesn't really matter in the end. Vision Chaser, welcome. Hey, thanks, man, for becoming a member. I appreciate you, sir. Mike Zicardi, you can talk in chat now, too. Mike Zicardi, a CFA, says S&P 500 breadth best in about 2 years per Goldman Sachs. We like increasing market breadth. It shows that the entire market is benefiting. That is good because when you have wealth kind of getting created broadly and you're not just sloshing the same money back and forth, it helps benefit more and more, and it gets this recursive upward spiral in wealth creation and the markets doing well and projects getting funded and just seeing growth. That can get irrational over time, but it's great over the short term. I put my kind of guy. So this is interesting. It shows political bias, and I don't know the reasoning behind it. But I do like it. So if you look here, this is Kevin Warsh, Fed chair, and these are the different policy stances he's taken from hawkish at the top to dovish down at the bottom. And what it's trying to imply is that he is a dove under Republican administrations, of which we have right now, and he is a hawk under Democratic. Now, I don't know the reasons why this happens, but the data tells us that's true. So again, everybody thinks he was going to be hawkish, and in actuality, he's more likely to be dovish. But people just don't pay attention to the rules of what's going on. Whoa, what happened here? I hate that so much. I hate it when it just reshuffles everything. I'm going to scroll down because I don't want it to be too screwed up. I want to make sure I don't miss all the things that I'm trying to talk to. So 1 second here. There we go. There's that. Next up. Oh, you son of a bitch. You did it again. You son of a biscuit eater. 1 sec, guys. Why does it do that? Why does it just jump all over the fucking place? I'm going to, 1 second here. I don't want to miss. All right. Oh, that's so annoying. So many bookmarks. This is crazy. 1 second, 1 second. I'm trying to see if I can understand the rhyme or reason to this. Let's see where it starts here. I might just go to the top. So that's right. Yeah, no, it reshuffled a bunch of shit. Why does it do that? All right, let's start here. So again, as you can see, massive, huge drop in inflation. This Trueflation data is just falling off a cliff right now at 0.68%. Definitely a sign that we should be lowering rates. And again, we're seeing initial job loss. That was always going to happen too. Another indication that we should lower rates. And again, so all these things are just lining up towards lower rates. My buddy Fijoa, I don't even know what this name is, but he's from Blockworks. He's great. He said basically impossible to get a recession when you're doing $600 billion of new marginal capex in a year. By the way, so again, just saying that the AI data center capex alone can keep us from having a recession, and I agree with that. Centrofil Garden, okay, that's a long one. 100% on jobs. Basic jobs that AI can do will be gone, but new jobs will emerge. Agreed. And it's going to be a transition. You'll see some jobs go away. You'll see growth. You'll see automation. You'll see more jobs coming in. It's just going to be like cyclical. You'll see this rolling throughout a bunch of different companies and sectors. I put bullish for expansion of PE ratios for infotech. So this is Seth Golden. Oh yeah, we looked at this one the other day. Wow, these things got fucked up. All right, 1 second. I'm going to try this again. This is annoying. I don't know why the bookmarks for X suck ass so much, but they do. They do. All right, let's see. Oh, and it did it again. Why does it do that? Literally, I get to the thing that I want to talk about, and then it just fucking jumps. Oh, I'm so annoyed. I just want to punch X in the face right now. I love you, Elon, but the bookmarks are like the worst, bro. They're the worst. I'm going to try and get down here and then not pass the thing right away and just see. I'm just going to stop like here for a second. Park it. Just hang out here. Let's see here. There's the paradox. There's that. I'm going to try this real quick. Right here. No, okay, that wasn't it. All right, I'm going to try and get down to that one. Oh, you son of a bitch. Whatever. We're just going to keep going. I don't give a fuck. All right. So we might miss some bookmarks. Whatever. Rate cuts aren't good if they're a reaction to a recession, but they're rocket fuel when you aren't in one. So my buddy Cantonese Cat a while ago in August posted this. Did you know that rate cuts can be good or bad for the market, but most of the time it's good for the market? showing the S&P. And again, rate cuts, good. The only times they weren't good, let me zoom in here. The only times they weren't good is at the dot-com bubble and then 2008. But that was as of a reaction to a crash. That was it. And ever since the 2008 crash, we just pump more money into the system, however we do it, whether it's yield curve controls, whatever we're doing. So I would argue it's good. So rates coming down is good. And we have massive CapEx growth. We have a Dow that hit $50,000, or I'm sorry, 50,000 points. And Trump is talking about 100,000 coming between now and I think the end of his term. So just crazy, or maybe he said this year, just crazy. Lauren Chin also, again, Snap no longer subsidizes buying junk food, and now the price of junk food is dropping. Could you imagine if we applied this principle to college or healthcare? Yes, I totally could. But again, this is what's happening. We're seeing deflation in different things. All right, so we got to that one. Hey, okay, I'll take this one. This is okay. The AI productivity boom is real and just getting started. So this shows the past year has been an explosion in coding productivity, year-on-year growth, and various indicators of coding output. So this is just showing code that's been checked in for new websites. And look at this. Look at the growth on this, guys. Look at what it was before through here. And again, little hiccups up. Now look at it. It's just massive. And iOS apps, look at this. Just insane levels of growth. GitHub code in the US and in the UK. So it's just allowing for massive amounts of additional programming that we haven't had before. I put smart people knew that inflation was not transitory after we printed 40. Well, you know what? This is redundant. We talked about it. Let me see what else we have here. This is one of the things I wanted to show you. Record tax refunds are now just starting to hit consumers' coffers. JP Morgan. And so if you look here, going back to 2009, look at the kind of tax returns that we're getting right now. It's more than double. So just remember, not only are people able to adjust their withholdings to make it to where their checks are bigger in the future, but they're getting a big return back. So the lower end to middle class that don't pay attention to their withholdings a lot, they're learning that they should change them, and they're also learning that they're going to get a much bigger check at the last minute, and they're not understanding this until they get it. They're going to go out and spend. Let's see here. So Hunter Horsley said, welcome to 2026. The banks are joining Team Crypto. Anthony Noto, I'm really getting interested in SoFi again. We'll see if I make any purchases on it. They're just getting in deeper into crypto. And again, I think there's so many things they're going to benefit on. I think student loan wise could get better. I think there's there's so many things that these guys can make money in, and they're 1/3 the size of Robinhood and so much smaller. JP Morgan is like a $850 billion bank. These guys are 25. But I love SoFi, and I use that app. That's what I've been trading in recently, actually, because I just like it so much, and it's so easy to use. And so I'm liking that, but I'm also loving the fact that they're getting more into crypto, and there's a lot of banks doing this. Tom Nash said on the 6th, could not have said it better myself. So Antonio said this, AI accelerating, earnings going up, thanks for the discounts. That's what he had to say about the market dropping. I feel the same way. We already looked at that one. Let's find stuff that's more relevant. Imagine thinking the sky is about to fall into this type of environment. And so it shows big tech's capital expenditures, where they were, where they are. Just massive growth, even though, again, Apple doing nothing. This is another chart I wanted to show you. So it says fascinating how two data points, trueflation and reported CPI, always eventually converge. So there's about a 45-day delay from what trueflation shows to what the CPI shows. And so in pink, you can see the CPI. And in this time frame, guys, around the pandemic, the CPI underreported. Imagine this, the federal government not wanting to show almost 12% inflation. That's what trueflation had here in orange. So you can see they underreported the amount of inflation, and we're also way behind in it. And then at the same time, when it dropped like a stone, the leading indicator here, it took a long time for them to kind of catch up. And that's happening again. Again, trueflation has us, you can't see it too well over here, but way, way lower. And the CPI just hasn't gotten there yet. But give it enough time, probably another month, and it will get there. Unusual Whales put investors from Europe own about half of all foreign holdings of U.S. stocks. So again, when we talked about how there was $4.6 trillion in additional U.S. bonds and treasuries purchased since the pandemic, they're also buying all of our stocks, and it looks like Europe is a huge portion of that. I'm imagining the bond market is as well. There's so many things. This is just like bouncing all over the place, and I hate it. Let me see here. Nope, that's old. That's old. Oh, it sucks. Let's go back up here and see if we can... How far we jumped. Oh, I had so many good slides in here too, guys. Such a bummer. Wow, that was a massive move. This thing jumped like... I don't even know how far. What are you doing? Let me see if I can find new things here. Just crazy. Oh, I hate this so much. All right. Let's see. We talked about that. So I said, if you can find software companies that will benefit from AI the most over the next few years, who'll make a fortune, Palantir, Tesla, and who else is Zeta next? So I think Zeta is a good offering, but this is just showing net exposure, prime book, U.S. software, and it's just in the dumps. Nobody has it. Nobody owns it. Doing very bad. I laugh every time the EU has an opinion about business or technology, and it just shows our market cap versus the EU. Yes, that's all of it. It's really sad and pathetic. Oracle is bigger than it. It might be a Salesforce. We had Dan Knives last week talking about the precipitous drop and his thoughts on it. I want to play those real quick. MicroStrategy got 1,142 BTC, 100% from the common stock. Interesting. Buying at 78K. What the fuck? Well, I mean, here's the thing. He doesn't care about the drops. He's not timing the market, guys. He's just buying. And he might have to pay a premium to get it versus what's getting liquidated over a very short period of time. He's going OTC most likely. He's not doing it just on the, straight from an exchange. So it's a very different thing. But I mean, it's pretty awesome that Michael Saylor and again, 1,142 Bitcoin is still a lot of Bitcoin being bought by one company when you're only using the common stock and you're not buying a lot for a given week. These guys are just still accumulating a ton. But let's listen to Dan Ives real quick here, talk about his thoughts on the precipitous drop.
I'm just curious to get your thoughts on some of the software companies. We were just talking with the CEO of Atlassian, and you mentioned Jensen Huang. He actually defended some of these software companies, saying that this sell-off was kind of overblown. The disruption that investors seem to be trying to suss out isn't quite there here. Do they have a place, those kind of smaller, I don't call them second tier, but you know what I mean, those smaller companies in this AI race?
Look, I mean, I can tell you in 25 years, this structural sell-off in software is unlike anything I've ever seen. I mean, I'm just saying in terms of the structural sell-off. If you look at Salesforce.com here, you have to assume that they're not just take the street numbers. You have to assume that they're actually declining the next few years. You have to assume with some of these companies, the ServiceNow, that they're losing.
And that's what people are doing. They're assuming that they're going to get cannibalized by AI, which could be an accurate assumption. But some will benefit. Some will benefit with the cannibalization because they'll have the AI agents and products that are integrating with it. And so you have to figure out which ones those are.
Using 2-5% of their customer base based on these valuations. The point is AI a headwind to software? Yeah, now. But to say that software doesn't have a place, I'd say almost front and center in terms of the use cases. Palantir has been a perfect example. What we're seeing, I think we'll see with Snowflake and MongoDB and others. I think right now this is, it's really unlike anything I've seen. That's why I say ServiceNow, you look at Salesforce, you look at Oracle, Microsoft.
I do want to, though, ask you.
I do agree with all that. And again, I think Tesla, I think Palantir, I think there's a number of software companies that are going to be great. I know people don't think of Tesla as a software company, but it very much is. But I think they're gonna do great. Let me see here. See what else we got. Gold and silver. Yeah, okay. So I got launched all the way down here again. I'm gonna see if I can find any of the slides I actually wanted to talk to. Oh my God, I'm seeing stuff from November in here. That pisses me off so much. One sec. We'll see if we can find more. If not, we'll just jump topic here. Yeah, this is all like resorted with just random fucking dates in here. Ah, such a bummer. I have so many good charts too. I'm going to try and refresh one more time. But I don't know if this just has too many things in the bookmarks or what, but it sucks pretty bad. Chad, if you have any questions at all, throw them out there. Happy to talk to them, okay? Throw out whatever you got. There's Drock. Yeah, see, we're already into January again. What the fuck? Annoying. Okay. I'm going to move on to the Bitcoin stuff. That's what we'll do. In my opinion, AI will ultimately help software companies to run more efficiently. Less engineers needed for greater profits. Right now, people are scared. I do agree with that. But I want to add one thing. You will see some software companies get absolutely butchered because the AIs will be able to just generate stuff in real time that eliminates so many of them. So it's going to be, you have to incorporate AI into your software products. If you're not a leader in that, you could get consumed by somebody with a much smaller profile coming out of nowhere and taking a huge amount of market share that you have to then buy the company or something just to survive. So yeah, I think it's going to be interesting. I'm excited to see the gap filled soon. I don't know where this fucking image came from. I must have accidentally added it. Didn't make any sense. But this was Crypto Klepto just saying, hey, there was a CME gap all the way to 84,560 just because we had the precipitous drop over the weekend with Bitcoin not too long ago. So we have a large gap between here and at 69,000 and that 84,000 range, but we will want to fill it. And again, it just depends on which way the market's going. I love, if you look in the bottom right corner with Bitcoin, I love the fact that we're sitting above peak volumes over the shorter time frame, going back to kind of the beginning of this last year. 2024. So being in 2024 and then having peak volumes in this range is really cool, sitting underneath of us. And again, just a large double set of volume here. Huge jump from that 60,000 range all the way up to 71 over the weekend. What I'd like to see right now is a consolidation. If you look here with the little finger, consolidation between where we're at around the 68,000s and the 71, and then a break above that. And if that happens, then our next target is 78 to 80, right around there where we hit this other resistance line. If we get to that in short order, it's a really good sign for Bitcoin that we're headed down the right path. I won't play all of this, but Jeff Park is brilliant. He is a Stanford grad, I want to say. Where else? Let me see. What does he all have going for him? Ex-Morgan Stanley, Stanford grad. He worked Bitwise advisor, ProCap. He's doing tons of stuff, and he's a very smart guy. Very well educated. I would look at some of the things he's talking about with wartime Bitcoin. I won't try and go over all of it right now. He had a really long write-up, too, over the weekend. That was pretty awesome. Milk Road put hell yeah, February 10th, White House meeting on stablecoin issues, looking to finally break the logjam on the Clarity Act, staff level officials. This is all good. So again, this is kind of what's happening. He goes into great detail about it. And Scott Bessent basically said, hey, we've got to do this. We've got to get this through. We've got to do it. History Guy Scalps, Jesse, what do you think about AI software being produced that can help folks perform cybercrime? Heard it on a podcast, so I don't know the specific. I mean, obviously, any of these things can be used for crime. There'll probably be weird versions. I'm sure some of these AI agents that can manipulate images are trying to do that with porn. I mean, porn and crime are like the birth of all technology, right? Like this is what sex, or I should say sex and crime are like, well, the things that feed a lot of these. It fed the internet in the beginning. It feeds just about everything, right? That's what people do. They revert to these basic things. So there's going to be criminals that use it. But I mean, there's also going to be AIs that are very intelligent that are trying to be the white hacker version of that are trying to defend against things like that. So you're going to have good and bad, just like normal. So I'm not too worried about it. But yeah, so again, you've got everybody pushing right now to get that Clarity Act through. When that happens, that's going to be amazing. Andre put here, Bitcoin looks prime for a 2020 post-COVID style slingshot move based on the macro and it's underpricing. I totally agree. We're going to jump into Bitcoin in a second. Well, I guess we're in it. But I'm going to show you some other charts here in a second that are going to be really good with that. And again, Mike Alfred was just saying, hey guys, this is crazy. Like this is one of the most oversold times in history. You should probably be buying now. And there was a Financial Times article over the weekend that was posted on X that had like Bitcoin's valued at 69,000 more than it should be, and then it went up, and then they changed the article to 70. If you want to know how retarded the person who wrote that fucking article was, this is the dumb bitch right here. Let's listen to her and see like how many times like she can talk about Bitcoin like and not understand it.
The Bitcoiners, like, why are they the experts in like monetary theory and like how to do like better politics and how to solve like failing democracy? Like, why? So you're saying that journalists aren't well trained enough? Well, so a Bitcoiner, are they the people that we should? I don't get that. Like, I hear what you're saying. Like, if you want to make criticism, you need to be
informed.
Well informed, right?
Yeah, right?
And I believe I am. I've been writing about Bitcoin for probably like a lot longer than like a lot of people here have been like into Bitcoin, right? I've been writing about it since 2015. A lot of people, like, you probably got into it later than that, right?
Much later.
Yeah, there you go. So like, it's not that I don't understand it. It's just that
better than you do, though.
I think I know Bitcoin better than you do, though. Oh my God. So just remember, every time they write these articles, there was a dot plot that showed every time they write these, how it's usually at the bottom. So I just want to throw that out there. Guys, when you're getting, this is the Financial fucking Times, okay? And again, they had it at 69, then they changed it to 70. You can see it right here. This is the level of intelligence you're getting from the Financial Times. Like, think about that. Like, you know, anyway. Julius, that was just painful to watch. This person is supposed to be educated and like literate. I'm a high school dropout and I can speak better than that woman. Bitcoin is at a bear market valuation. So again, this is just a great chart. Bitcoin global liquidity oscillator. It just shows how the Z-score is rock bottom at the bottom of the markets, right? Like you can see over here in 2023 when Bitcoin bottomed. You can see over here at the pandemic when we bottomed. You can see over here when it had bottomed from the cycle. And then again, everybody got excited that Bitcoin was going to go up a bunch. And then we got screwed at the pandemic. But you can see where this is the bottom. And then you got the gold global liquidity oscillator absolutely through the roof. And then you've got the Bitcoin to gold liquidity relative oscillator showing again that it's just at a crazy low level that's off the charts. So most likely scenario. Ooh, we got Besant. 1 second here, guys. We got Besant. I might have to pull this over. Give me a second. I got to see if I can. They said that they detected. 1 second here. I got to do tv.youtube. All right. I got to pull up YouTube again. It said it detected a VPN, but I know my VPN isn't running. Bitches. Let me see what I can do here. Oh, I want to see this. I want to see this. 1 sec. I'm going to go in here to YouTube. Just give me a second. Give you that to look at for now. Security. Shields. View permission for sites. YouTube. TV. Oh, is it all stored under YouTube? I don't want to wipe that out. 1 second here. I'm going to try something else. YouTube. I got to see if I can get this to work. I know I don't have a VPN running. I shouldn't. So I think it's just picking that up from what I did. You son of a bitch. It won't let me through. I'll have to figure it out later. It's probably some weird cache thing. Okay, bummer. Yeah. Oh, I'm looking at him too. I wish I could show it to you. Let's keep going. Bitcoin therapist put Bitcoin is 0.00127% of the world's wealth. It just shows wealth across the world. Again, lots of wealth in real estate, evidently. What is this to? Is this, let's see, 1,000, million, billion, trillion? Yeah, that sounds right. And then you can see oil, Chinese yuan, gold. So this is trillions, 672 trillion. That's one thing people don't realize. When they talk about America's debt, they never think of the fact that, yeah, sure, we've got 37, 38 trillion, whatever the number is now in debt. But what are our assets worth? I mean, look at real estate up here. Look at the oil that we have in the ground. Think about the gold that we have in our possession. Think about all of the other things that equate to wealth. I mean, one of the biggest things on here is Nvidia. That's an American company, right? Apple, Alphabet. We've only gotten down to the 14th. And so we have so much wealth in this country. It's not just negative. People only look at the negative, but if we start to use our assets, the real estate, the leasing that we can do in order to be able to get access to resources, we have a very nice looking balance sheet. And that's what people should be looking at. See, Casio said, Coinbase Premium Index is going vertical. This is interesting. I'll tell you what this is for people that don't know it, but he said that usually means one thing: aggressive U.S. spot demand. Either banks are front-running the crypto bill, which unlocked $3+ trillion of institutional capital via stablecoins, or the U.S. government has started buying to build the strategic reserve. So again, there was Jim Cramer the end of last week talking and making people speculate as to whether or not the government was buying. So this is very fascinating. Seeing the Coinbase premium go up so much, though, tells me that, yes, spot demand was fucking huge. And this is going back this is going back a little ways, and it's a large spike for such a short time. It went from very negative to very powerful, and that's what you want to see. And then, again, people talking about how the power law isn't dead. Bitcoin versus gold, power law is not broken. This ratio, you can see how it's still right in the bottom range, but again, it's sitting there pretty strong. Ethereum, guys, we had the highest weekly volume candle. If you look over here, it's kind of hard to see in this image. Right over here. It's kind of hard to see, but we're slightly over this. You can't even see it from where this is because my stuff is in the way. But take my word for it. The highest volume, actually, that we had hit was over here where this dot is in the bottom left. You can see it down there. And that was 3 years ago. When you see these kind of volume peaks, you realize that there's a substantive change in the cycle. And the fact that it was doing that on a drop basically says, hey, there is some massive buying power that just kicked in here. This is a good sign. Normally, this is a really good sign. If you had that kind of volume spike at a new high, it would be a bad sign. But when you have that new spike after a precipitous drop, that is usually a good sign. Let me get caught up with chat. Jesse, check out the metrics of HIMS on visual stocks. Look at the current price. Yes, there is some legal risk. Yeah, I've seen there's been a lot of crazy news on that one. I'll have to check it out. I don't know that market as well. I know the numbers look good, but I don't know about all the news and just what's going on with the company. History Guy Scalps, Jesse, what do you think about AI software being produced that can help? Oh, we already did that. Just like Grok, but people are nuts. Yes. Yeah, that lady was so bad, dude. I can't believe she's a speaker at a Bitcoin event. I know, right? I'm pretty sure she's never going back. Aldo loves, I buy spot via Swan weekly. I purchased crypto via Coinbase for the first time in 2 years this weekend. So yeah, you're probably one of these people that's been buying. And again, I think a lot of people are doing that. They're looking at the strength in Bitcoin and they're saying, wow, is this the time where maybe gold starts to top off through a wedge or a bear flag, and then some of that money starts flowing into Bitcoin? It only takes a fraction to send up Bitcoin up a shit ton. The vessels for silver and gold are just so much bigger. Again, it's like 20x or something when you look at the metals, or look at the major metals against Bitcoin's market cap. It's so much bigger. This is that I put scholarly write-up from a brilliant man. This is a good one, but I'm not going to go through it right now because the concepts are a little complicated and you go through a ton of history here. But again, I encourage you to read through it if you want to really have a good understanding of what's been happening in markets here recently and what he thinks is going to happen with Bitcoin's price action. Tom Lee said, look at the charts closely. Every recovery in ETH is V-shaped. Symmetric recovery, faster the decline, faster the recovery. He is right. If you look over here, it's from one of his slides just talking about how we dropped so quickly. 40% in 10 calendar days is a shit ton. And showing you that whenever we've had major drops, and right now we had a 62% drop, you could see what comes next. It's usually a spike. Like this is probably the slowest. This is after the bear market has completed and people are slowly getting interested in crypto. But the ones more recently here where you have these really precipitous drops, they go up a lot. And you can see that throughout the history. I think that's happening again too. I talked about how STRC, this is just a great investment if you're trying to get a yield. So if you're older and you're trying to get some kind of income on your money, a bank account gives you 0.4. Commercial paper gives you 3.6. The money markets give you 3.6. Treasury bills give you 3.7. Mortgage backed is 4.7. Investment grade is 4.8. Bank preferreds are 6.3. Junk bonds are around 6.5. Private credit is around 8.4. But STRC is 11.3. And I think SATA, the one that goes with Strive, is an even better number than that. And again, if you're in Japan, the Metaplanet version of that. Oh, Kevin Hassett's been talking so much. I'm dying not knowing what he's saying. I will fix whatever the fuck is going on with my YouTube TV thing because I really, really want to hear that. You know what? I've got a subscription to CNBC. I got to see this. I need to know what this man is fucking saying. And I'm pretty sure I paid for this shit. Let me see here. Let me sign in. If I kept my CNBC Pro, which I'm pretty sure I did, then, just one second, then we're going to pull that up because I want to hear what Hassett's saying. He's got a ton going on. Oh, one sec. I got to do this key thing. All right, let's see. Logging in. If that works, it says you're signed in. That's good. Videos. Let me see here. See if I can find some Hassett. You know what? Maybe I could do live stream. I'm trying to remember. I might just click on that. Let me go over here. 1 second here. I'll try and answer that question in a second. Oh, wait. Oh, maybe I don't. Am I not subbed anymore? Son of a bitch. I might not be. Subscribe. Fuck. Okay, never mind. I'll have to get YouTube TV working or I'll have to subscribe again. Damn it. Let's see here. Jesse, are the dividends from STRC taxes as normal income? I don't think so. I don't think, but you'd have to check to be sure. I don't know off the top of my head. Does anybody know well enough, or can they throw it in Grok and give us an answer? I don't know off the top of my head, so I don't want to give you an answer. They are asking Kevin ICE questions. Oh, I don't care about that. Shauna, Jesse, could you add one more show a week? Maybe. I might do like a... it's hard to do a Friday because nobody shows up for it. Nobody wants to do anything on Friday. They're just like trying to check out of everything in life. Maybe a Thursday if I do it, but I can't commit to it right now. I'm enjoying not having it and just doing a bunch of research. Tom Lee lost credibility in the last 2 months. I don't think so. People always feel that way. That reminds me of, somebody told me that people will never buy BMNR again because Tom Lee just screwed so many people. I remember that same conversation about Robinhood and with Vlad Tenev because of all the shit that happened with GameStop. Nobody gives a fuck anymore. Nobody cares. Not even a little bit. So they love Robinhood. Robinhood's went up a shit ton. So I don't think it matters. I think price drives narrative. People will forgive Tom Lee really quickly if they make back their money and then start making money.
Based on what you know now.
Here, we're going to listen to this Clarity Act part here with Scott Bessent. 1 second here.
Now, what is your opinion about the importance of having clear rules of the road, market structure legislation in the United States?
Look, I think
thank you.
That it's impossible to proceed without it. We have to get this Clarity Act across the finish line, and any market participants who don't want it should move to El Salvador.
I love him so much. Real quickly, SSB Machado. It's so hard to know like which part is supposed to be what. 100% of distributions paid by Strategy during 2025 on its digital credit instruments were treated as non-taxable return of capital, which is great. If you don't want it to show as income, but you kind of want some income coming in, you don't want it taxable, but you want something coming in that's going to be able to help you out, that looks like a great option. Victor Hernandez, one thing that pisses me off is that now that L2 are out of ETH should decouple from BTC valuation in some way. ETH should actually go higher. If you look at the ratios, it should. Real quickly, let's see what else he had. You know what? I think there's another video I wanted to play instead. I do want to show you this, though. Kush posted this. It's so good. It just talks about gold, and it shows the setup with Bitcoin and then the setup with gold. And you can see that same setup. You can see the cup and handle, right? You can see the cup over here. It even has the double top. Look at that. Double top right here, right? Then it has the cup. Then it has the handle. Over here, it's got a handle too, and it just grinded for like a really long time. This time was different. We got the handle. We tested up, and then we broke down to back test this range before going higher. It doesn't mean we're not going higher. And what he has some overshoots here. This, I don't think you get a wave 5 on this. But I do think that if you just look at this cup and handle, the measured move gets us up to the 280s. And I think that's very doable. Whether we can go higher than that, I'm not sure. Reevaluate later. I definitely have some profits in at 280. I'll tell you that, especially if it's in the next year or so. From Sailor's post a few days ago, 100%. Oh, okay, cool. Victor Hernandez, one thing that pisses me off. Oh, that was you. Let's see, math. It's more about his price predictions. Yeah, I know. But it doesn't matter. People forget about things very quickly. More recently here, he warned of a market correction, and he was a little more hesitant, and he was right, and we got it. And now he's very bullish again. So again, you can be wrong for a period of time. It doesn't really matter. I put what a fucking gorgeous chart. This is just so beautiful. Again, we got to the 200 moving average. That's this orange line. That is an area you want to stay above. This other green line, right, going all the way down here, this ascending one, that was the support zone going all the way back to 2000 and what was it? 2017? Yes, 2017. So this thing goes way back. So you got the 200 moving average, a range that goes back to 2017, and this green line, horizontal line, is the .618 golden retracement zone. This is all the areas you would want to bounce hard. And not only did we bounce hard, but we got above all the peak volumes on the right over here, both these cliffs, which are pretty big ones. And now we're consolidating in that range at 69,123. This is just a really good place to be. And what I would expect to see next is some grinding between these levels before going higher. And what's great about this is there was this potential of a head and shoulders here, right? This looks like the right shoulder, really tiny. We overshot that though, and then bounced really hard. That's good. All this volume over here, we're above it. And all we have is a little wick. And so if we grind in this range, it doesn't look like a good head and shoulders. What it looks like is a continuation higher, and that being a much more likely probability. So I'm really liking the setup that we're seeing right now, guys. Also, for the Ethereum bulls, just to give you guys some more ammo, 27.1 billion net stablecoin inflow into Ethereum in the past 6 months. Ethereum is getting the bulk of this, which is really cool. Cypher upgraded today to a $38 price target. I love that. That is my biggest position. I think it's my biggest position, or it's close to. No, it's probably Tesla. And that's probably the second one. For AI stuff, though, that's my biggest. So that's fucking kick-ass, dude. Thanks, Alex. I appreciate you, brother. Matt says, it would be awesome if you did a macro show like this once a week, and maybe a more in-depth stock technical and fundamental show once a week. Yeah, I just got to get better organized for it. If I can play around with some AI agents and get it to where they're doing some of the work for me as far as the posting and finding of articles and things that I find interesting that I want to talk about, if I can automate more of that, because I do so much of it manually right now, then something like that sounds a lot more feasible. There's just only so much time I'm willing to put into all of this, and there's so much data I'm absorbing all the time to try and make sure that my head's right on where I think we're going long term. So we'll have to see. We'll have to see what I can do with it. Let's see here. Jesse, can you comment on RCAT? Been selling covered calls for 1 to 2 weeks now, sold 1150 puts, and bought more shares last week after the drop. Comments appreciate. I think it's set to go higher. I'll just look at it real quick here and then move back over. But I do think this, though. I think you do have some divergence in the RSI going down while this is going up. Choking on my own spit. But you can see here that this volume is huge. So if we can grind and establish support above this volume, which I think we're starting to do, then we can head higher and then we can break out. These rising wedges, like you got to take them. It's bearish, but it's not really rising that much. And so the longer it sits here, the higher the chance of it going higher. This is only a $1.51 billion stock. And it's in a sector that's defense related. And so you have to just think about all the extra money that we're planning on putting into defense. It's a big deal. So, and again, guys, last week, ignore Strive at the top. A few people caught that because of the reverse split. But look at the rest of these. I mean, so there were a lot of these that did really good, better than this even at the end of close on Friday. It was pretty amazing. Also, Bitcoin ETFs. We saw a lot of selling last week, but you know what we didn't see selling on? The IBIT holders or the ETF holders for Bitcoin. 90% of them just fucking hung out. These are long-term holders, man. So I think that's setting a much higher price floor than what we've seen before. Orange dots matter. Orange dots lives matter. I agree with that. Charles Schwab to launch spot BTC and ETH trading by mid-2026. Charles Schwab, CEO, announced plans for direct spot Bitcoin and Ethereum trading in the first half. we're not topping and going into a bear market with all of the activity we're seeing in this sector and getting ready to do the Clarity Act, where again, Mr. Wonderful was talking about this. There's so much money sitting on the sidelines, trillions of dollars that are looking to enter that just aren't yet, because again, they're waiting to see if the gold trade is played out, and they're waiting to make sure that the economy is doing well. If it's doing well, Bitcoin is going to really prosper. I wanted to talk to this too. This is huge. James, this almost ended a 3-month miner capitulation, one of the longest on record, while miners are spending fewer coins in this downturn due to the AI pivot. So we have less miners right now. We had this kind of weird mid-cycle dump from miners. I mean, look at this, guys. We had 180 trillion. If you look over here, over 1.2 zettahash, I believe, up to 1.3, I want to say up here, maybe, yeah, probably about 1.3, dropping all the way down here into the 700s. So you had almost a 55% from peak to trough drop in hash rate, and the difficulty is plummeting. You know what I love about this? CleanSpark is still a Bitcoin miner, right? They're not stopping that anytime soon, and their earnings were pretty good. We'll try and look at some of the financials here a little bit later, but they are going to benefit by this getting easier. We're back to levels, guys, for mining that we were in May of 2025. So 9 months ago, 10 months ago, we're looking at. This is great. And we could drop even further. We could be at levels from 2024, which means the rewards are going to be a lot greater for the people that are still mining and increasing hash rate. So Bitcoin miners that are still mining, that are really efficient, like CleanSpark, I think can do quite well. It's not so much today. It's down 3.27% in pre-market. But Iron's down 0.79 and Cypher, I guess, is up 2.17, but that's probably because of that upgrade. But I think that Bitcoin miners, I think this is going to be a surprise for Q1 data, especially if Bitcoin takes off in price, is people are going to see, wow, okay, if we get back up into like the 90s over the next couple of months, then people are even in the 100,000 range, people are going to be like, whoa, CleanSpark's making a lot more money now. And doing really well because they've just been increasing hash, and then they're working on the AI narrative too. So I think they could look good. Yeah, I think they could look good, Victor, later. Let me see here. Worse sentiment than during the FTX collapse. So this was just showing crypto asset sentiment and saying that this was the equivalent of all of our exchanges collapsing and really the bear market bottom of crypto for this last cycle. Matthew really was very hyped up on the earnings call. Yeah, dude. And I love Matt Schultz. I think he's great. And to see him hyped up is a wonderful thing. Plus, these guys have insights. They talk to the White House. We saw Michael Saylor hanging out at a Trump event just the other day, this last week. And then look at this. Google search interest for Bitcoin exploded with the market dropping. Everybody got excited and started buying in. This is only 90 days, but that is a huge spike. You can tell where we went from nothing to a whole bunch more. And again, the daily sentiment index, tradefutures.com, just showed that Bitcoin sentiment was through the floor, fucking horrible. I put, this doesn't need to be true to be useful for Bitcoin's price action. So this was the Kramer saying, I heard Trump was buying Bitcoin and the reserve. I said, also, can we manipulate the price in a budget neutral way? So what I'm saying by this is right now we only have approval to be able to acquire Bitcoin in a budget neutral way. Confiscations count as that, right? So we just got a bunch of Bitcoin recently here because of some confiscation I forget the details of. And so that is stuff that we're able to add into our reserve. We also, not to get off on another subject, had some people that had access stealing from the reserve, but they've got security issues they need to work on, whatever. I'm not too worried about that right now. But what I'm saying here is, can we manipulate the price of Bitcoin in a way that appears budget neutral, but is changing price action to be positive or prevent it from dropping? You got to remember, we've got a plunge protection team in the United States that tries to prevent the markets from dropping too far. So the Treasury and Fed have a lot of tools in their war chest. Is it possible that when they want, they can manipulate the price of Bitcoin higher? I would think that they could figure out a way that is budget neutral to do that without congressional approval. So I'm just saying, maybe we are doing some stuff. You never know. Super Trade put capitulation in BTC yesterday. We saw record put volume in IBIT. We saw record volume in shares for IBIT, and then Bitcoin sentiment at a 3-year low. Again, just amazing data points here, guys. This is crazy. Like, these were very clear delineations in a change. And then we have, oh, that jumped on me. Son of a bitch. Fucking hate that shit. Oh, this is cool. Long Investor, he had a post on here that said his 15-year projection, price target is 42,000, 2,100% increase, and you're worried about the 200 WMA. So again, and that's a long time frame. I don't even care about that time frame. But if you look over here in 2029, he's saying 14,000 on Ethereum. I actually think that we could do way before 2028. He's got 2027 to 2028. I think maybe even 2026 to 2027. We could see 10,000 to 11,000 on Ethereum. So I'm actually probably more bullish than he is. This was a video, guys, where Kevin Warsh. Oh my God, this is so good. I just got to repost this. This is Kevin Warsh talking
you made
about Bitcoin. Oh no, that's just the Bitcoin one. It's awesome, but it's not that good. It's not as good as the other stuff I was talking about. Let me see here. I want to make sure I didn't miss anything else. Jump bookmarks here too. Son of a biscuit eater. Bums me out. Let me see here. I think that's a lot of this. The bookmarks aren't winning anyway, so whatever. Getting too annoyed. Bitcoin's fourth most oversold time in history. I think I'm going to jump over to AI here in a second. Again, just tons of different indicators, guys. Bitcoin capitulation metric. Again, just showing that we did capitulate hard. There's just a lot of good data that shows that we're probably at the bottom. All right, we're going to get out of that. We're going to go to AI. If you guys have any other questions, please throw them out there. AI and chips, and the liquid cooling company is very promising and tech guided. Oh yeah, with CleanSpark. Yep, they're like number 8 in the tech sector, I think, for what they do. Sorry to spam chat, no problem. Yeah, Craig Fuller said this kind of crap that stunted America and industrial dominance. So it's talking about New York. It's talking about proposing a sweeping 3-year pause on data center construction. That would be absolutely stupid. But hey, if liberal states and regions and cities want to prevent themselves from making a bunch of money with data centers that are probably just going to be massive tax revenues in the future, you guys do you. I don't care. Also, I just want to show this, guys. This is another AI. I don't even know which one it is. C-Dance 2.0. There's so many. But the thing I want you to just focus on here is that this can literally very soon replace Hollywood. And just even a year or two ago, people would laugh about that. There was the Will Smith video thing where there's like noodles and it was like rolling into his face, and like AI was just really janky and weird at trying to make video or imagery. And look at it now. Elon talks about games being like this. Imagine playing a game that you created in real time or that you had just pop up, and you're able to interface with it and you can make changes to it and the skins and like the way it looks and play it in real time like this, where there's no hard code in it. It's just you prompting it and creating a game in real time. Like this, video games, all these things are going to change so much in the future, and they're going to be way more, creativity is going to be way more accessible to a lot of people, including my wife. She loves doing video editing stuff. Look at this. Can you imagine this game or a movie? Just imagine where we're going to be in 2 years, 5 years. It's going to be nuts. I can't imagine. Let me see. Do you think BTC, it's true that BTC will reach 50 or 35? I think 35 is so fucking far away. Could it do that? Yeah. If something crazy happens, maybe that can happen. 50, getting to the 50s seems more plausible. We made it to 60 already. I mean, getting into the 50s wouldn't be much of a difference. But I don't think, technically, I think the bet setup is much better right now. with not doing that. And I think that that's the path we're going to head down. I wouldn't like it as much if it did, because then you fall into, oh, okay, now you've fallen into a different range. You've fallen under that 8-year upward trend line. You're under the 200 moving average. You have more negatives that come into play. And then you have potentially a longer bear cycle. And I just don't think that's what's happening right now. Not with all this AI CapEx, not with all the lower rates coming and the loans that are going to increase and all the money from tax returns and all the $2,000. We're going to have so many reasons to go higher. People just don't understand it. Do you think? Central said the data center pause in New York is why I was bearish on Wolf. Now that they've expanded outside of New York, they're more appealing. Yeah, definitely. It sucks when some jurisdictional things happen that throw off your thesis. Hershey said, "Hey Jesse, is Cypher still good area to enter?" I think so. I think having additional price target raises only helps them. I think so, but I don't know your portfolio. And again, there's so many things that go into that. You're gonna have to figure it out on your own. Long view, total AI CapEx, hyperscaler CapEx explodes higher. 2026 estimate based on midpoint guidance, Meta, Google, Amazon, Bloomberg consensus. The thing I wanted to point out with this chart is that if you look over here, the concept of AI, as far as ChatGPT really creating the industry, started in like late 2023 to 2024, right? That's when this thing kind of got birthed. And it's really 2024 where people realize they're going to have to spend a lot more. If you look over here, it didn't really have a lot of change in CapEx. And but then all of a sudden it's exploded. And it's just going parabolic right now. And I don't see that changing anytime soon. And none of the most brilliant people on the planet that run all these companies think that that's going to change anytime soon. So I'm sticking with them. The last 3 years was the start of real AI, and it's up and to the right. And again, this just shows individually some of these companies. Look at Google, look at Amazon, look at Microsoft, even and Meta, all the spending. And that doesn't include Tesla and all these other juggernauts. I think that's a big deal. I like this real quick. I wanted to show this. Nick is an interesting cat. He could be a little crazy sometimes. But he's just talking about AI agent armies. And I think he has some good things to say in here. So I wanted you guys to hear it.
Guys, the AI agent economy is here, and the people who figure out what I just did are the ones who are about to make a fortune. Here's what I mean. For the past few weeks, I've been building out my AI agent system using OpenClaw, the AI agent platform that's been taking the tech world by storm. You've seen it all over the place on X and Instagram. After nearly 2 weeks of running my system, I hit a wall that changed how I think about basically everything. You see, at first, you start with one agent that's doing everything, managing your calendar, doing research, writing code, whatever you can think of, and it works pretty well. But then you realize you don't have one app on your phone that does everything. Why would you have one AI agent that does everything? So I started building specialized agents, one that monitors my Instagram and finds viral content in my niche, another scans
I actually love the idea of doing this.
X for breaking news. Another one is a dedicated idea generator for interesting posts that I can make. Each of them runs on its own, gets better over time, both from my feedback and its own self-reflection. And here's the part that blew my mind. I built a parent agent that monitors all of them. Think of it like a virtual manager running performance reviews on your AI employees. So here's what you need to think about. Right now, we are in the same place with AI agents that we were with the App Store in 2008. Back then, the people who built apps, a lot of them ended up making millions. The same thing is happening right now with agents. As we transition from apps to agents, you're either going to learn how to build them or you're going to pay someone who builds them for you. If you want to make money in this new wave, start now. Learn how to create specialized agents. Honestly, just play around with the tools. Find problems that need solving for yourself. Then, if you really want to make money, package them for others. The people building agents today are the people who are going to sell them tomorrow.
I 100% agree with that. And I'll just say this too. It went from websites at the .com area. It was all about websites. It was that way for a very long time, to apps. And now it's agents. And I 100% agree with that. I think it was cool how he articulated his experience with it. I put Elon replies pretty much. So this is to Anthony Pompliano. People are going to freak out when they realize the large AI labs can train a model to do your job simply by feeding it screen recordings of what you do on a daily basis. That is so true. You could literally, when they downsize in companies, they'll probably just literally start recording everything that these people do in their jobs, and they could do that for a month and catch 99% of the use cases. and then you could probably fire like half the fucking people or more, and just have some other people there for escalation. So it's pretty crazy to think about, but I do think that that's coming. Grok just passed DeepSeek for the first time in January with 314 million visits versus 298.3. That makes Grok the third most visited Gen AI tool. That is awesome. This is cool too. U.S. Department of Energy data centers are helping drive energy prices down. I don't always love this guy because he's just so anti-solar. Hopefully that changes here in this administration. That's one thing I have a gripe with. But he is right about a lot of it.
Data centers are actually a road to drive electricity prices down, not up. If you look over the last 5 years, the states with rapid demand growth are the states that have had no rise in electricity prices or rises well below the rate of inflation. States like New York and California and Massachusetts, they produce less electricity today than they did 5 years ago. Those are the states with very rapid rises in electricity prices. So data centers are a force for good. And President Trump's common sense energy agenda is going to allow us relatively rapidly to grow the production of electricity in this country as we sweep out so much of the nonsense that was left behind. But we just went through an epic demand surge with this very large cold front that covered a huge amount of the country. And even the common sense policies of the last 12 months made a huge difference there. We kept 17 gigawatts of coal power plants open. That was critical to saving American lives, to the storm we just went through. Coal was the second largest source of electricity generation after natural gas during these storms because you can ramp it up when peak demand. And unfortunately, wind and solar that we've invested so much in went on vacation when we needed them most. Real quick, in New England at the
I mean, and here's the thing. He is right about that, but batteries solve that problem, and he just seems to ignore that concept every fucking time.
very peak demand time, that is the design criterion for an electric grid. Keep the lights on and homes warm at peak demand. At peak demand time, wind, solar, and batteries provided 2% of the electricity in New England, well below the 3% provided by burning trash and wood.
I mean, that's a pretty damning number. But again, if you have batteries, you're able to capture more of this. And there's some places it applies, and it's probably going to be warmer climates versus other ones where it doesn't, and solar doesn't make sense. But I do think we're going to end up doing a lot more of that. I mean, Elon thinks that too, and he's a pretty brilliant guy. Speaking of that, Grok 4.2 just dominated the Alpha Arena leaderboard. Grok delivered 34.59% return on the top spot overall. So again, just beating everybody else. GPT 5.1. DeepSeek, Gemini, Quinn, just a lot of different things. It's just awesome to see. Naval put there's unlimited demand for intelligence, and Elon put true. Once the solar energy generation to robot manufacturing to chip fabrication to AI loop is closed, conventional currency will just get in the way. Just wattage and tonnage will matter, not dollars. So again, he's talking about a ways out there. It's going to take a little bit of time to make all of that happen, but again, that is something we should be thinking about. And Milk Road just put on here, blockchains will become the new app store. I agree with that too. I think again, AI and crypto are very much going to tie in with each other, and this new crypto store, agent store, app store, whatever we want to call it. I think all these things are going to be related. All right, I think that's good enough for now. What else we got? There's probably other stuff, but we can skip that. I'm going to go to energy real quick. And then if you guys have anything else you want to talk about, throw it out there. Market right now, it's not really too red. It's kind of light red. Tesla's down 0.02%. MicroStrategy's down more at 4.9%. But again, some of these crypto ones, guys, they were up 25, 30%. Iron, I think, was up 50% from its bottom in after hours, the day of its earnings. So some of these have done so well, you just kind of expect it. So look at this massive increase in energy grid expansion in 2025. So this is interesting because U.S. planned utility scale electric generating capacity additions. 2025, massive numbers for solar. That's what in yellow here, the solar, and then battery storage is in this deep blue, and then natural gas in the light blue, and then wind in the green, and then other is in gray, and you can barely see it. But yeah, so we're seeing massive growth in solar and battery. So this is happening no matter what, whether Trump supports it or not, it's happening. A lot of good posts in here about data center utilization and energy demands. And again, my friend Jeff pushing Yossi and Tesla. Let's see here. PJM's December auction was short, 6.5 gigawatts for 1 year. So this is one of the largest interconnects in the country, largest U.S. grid producer or supplier, and they said that they're going to be drastically short over the next decade. We need $180 billion in spending that's going to be done in the energy sector in order to be able to increase output to the way that we need it. So there will be energy increases. It's just where they end up being impacted, and I think a lot of it is going to be on the end company, because that seems to be where Trump is trying to put it, to where it's not pushed on to other people in the localities of where these data centers are being produced. Mr. Cha got in late, sorry, but did we already talk about Iron? Not really. Not really. We talked about Cypher a little bit. Iron's chart, it's kind of rejecting off this previous support line. It's not really finding it. It's dipped below it several times now. We're trying to turn it into support. If you look at the longer time frame on the weekly, it kind of looks like support. But we need to close this week above it too. So you can see where we did hit it here and we bounced off of it. As far as just the technicalities here, I thought their earnings call was good. I've just started listening to them though, so I'm probably not as versed in some of these others. And we can pull up some of the notes that I've gotten from other people in regard to their thoughts on the call. I thought it went fine. I think people just don't understand that they're negotiating contracts that they're going to have finalized soon enough, and that the Microsoft contract was something where, again, they just needed they needed a tenant, right? They needed a tenant that's got a big name. You do that with malls, right? You need to have your Macy's or whatever it is. You need a bigger store inside of your mall to be able to drive other stores into there, because they know that big one's got some foot traffic. I think that in this data center world, you want to know that, oh, okay, is this going to be reliable? Well, I mean, Microsoft uses it, and then you're going to be okay with it. And I think there's a similar concept that goes on with these. So I think that the revenues from Microsoft are a little bit weaker than what they're going to have going forward with some of these other deals that they're doing. I think they're closing deals, and then they're adding more power into their portfolio, and I think it's going to be awesome. Do you have any charts showing the rotation into small caps? I think I do, but my charts are all over the fucking place. But I did have one. It was the IWM versus the QQQ, and it showed that we had a breakout forming. Whether I can find that right now or not, I don't know, but it did show that. Let's see, and I can pull up Iron real quick on here too. Let me just jump out. Iron. Market doesn't like how Iron keeps their cards very close to their chest, but when the new deal drops, yeah, I think so too. Let me see here. And again, we just had such a huge bounce. It was a really good sign that we had such a strong bounce. Breaking Bernstein describes Iron as their largest vertically integrated AI data center platform. Bernstein research report price target reiterated at $125. Macquarie, I think that's how you pronounce it, put out one at $70. And right now, what is the stock trading at? 41 in pre-market, down 2%. So I think it's very possible that we're going to go up higher here. We're going to get above this and find support yet again on the weekly time frame. And that's going to be good. It's going to just show that we're ready for a continuation. I think people are going to start getting these plays. They're going to start realizing that being vertically integrated, being connected, having your power sources all tied up, just like they're going to do well in the end. And I don't know if I want to go much more into this. Again, the Oklahoma 1.6 gigawatt data center campus that they've acquired, it lifts them up to 4.5 gigawatts, which is a huge amount of power. Let me see here. Go back over here for a sec. China's installing a ton of power. We definitely have to pick up the pace with everything. And I think Elon was saying that in one of his recent videos too. And I do believe that we'll be able to do that. I think there's going to be plenty of incentive to do that. The trend is your friend. Batteries. Yeah, just massive increase in battery utilization. I think we're done with that. What time is it right now? 7:58. Let's see. Again, I don't think we have any economic data that matters too much today, but we did have a couple of data points, I think. What is it? Anything for the U.S.? No. Consumer inflation expectations. That's been pushed down to 4 o'clock. So we got nothing over here. Let me see if Fundstrat had anything. Let me go back. Research. Oh, I see more Hassett on CNBC. Damn it. I want to hear what he has to say. I need to fix that. FSI, sector allocation. Click here to download. Oh, that's probably a whole thing. I'll stay out of that for now. All right. What are we at? Almost 8 o'clock. BTC advanced, but you can't underestimate the short-term psychological fear and damage that has occurred and will affect the near term. Yeah, there's probably some of that. But again, I think everything I'm seeing about Bitcoin looks really good right now. I'm not worried about it. Right now in pre-market, EOC's up 0.73%, Red Cat's down 0.24%, Nvidia's down 0.74%, Tesla's down 0.24%, CleanSpark's down 4%, but Cypher's up 1.6%. And yeah, I don't know. A lot of these things are doing all right. BMNR is down 4.4%, but again, it was up huge last week. Enphase is down 0.02. I did want to say something about Enphase, guys. Just a word of caution. If you are short time framed, I love the stock, but again, I liquidated a bunch of it because I was up 70% or something on it. But there is a huge gap right here. We've got tons of gaps above us, really big ones, like over here, massive gaps, right? This one, I'm sure we're going to get to this, I think, in the next 2 years. If this company executes, I think 200s could be it. For sure, because I mean, again, we've kind of done a full cycle on this one. But I don't know how quickly it happens. It just all depends on their ability to execute and the real estate market doing well into the early part of this next year. But this is a big gap on the daily. And so I would just caution that we could drop. I mean, this thing could drop from 40s down into the upper 30s. So you could see this come back a little bit. So just, I'm going to be buying back into this one for sure. But unless something else really takes off, I'm not going to be doing it super fast. I'm in no rush. Matthew talked about many AI HPC rushed. So this is about CleanSpark to disclaim a contract with high cost penalties if not achieving requirements. CleanSpark is doing the other way around, not disclosing until tenant is okay. See, I think that's good, and they're taking their time and they're picking a good one. I like that. NBO is suing HIMS for selling unapproved FDA compounds. I know, I heard that. There's a few different things like that are kind of noise with HIMS right now. But who knows? If it turns out well, that could be a really good option or opportunity. Guys, I think I'm going to call it here. I heard my wife come home. I think I'm just going to call it for the day. My bookmarks have been horrific, and so it's hopefully, though, I gave you enough hopium to understand that I think the market's going to do really well. I think GDP is going to grow a ton. I think ISM is going to get over 60. I think we got tons of data points. We got good things that could happen over this next week. Again, we could have a housing bill that's getting passed in early stages. We could have the Clarity Act, probably not this week, but within the next several weeks, maybe in March, if it takes too long. That's going to take a while to get through. But once these things happen in the next weeks, months, I think we're going to take off like crazy, at least in the Bitcoin world. And I think AI isn't going anywhere. And I think just make sure that you stay out of leverage and that you're not overextending yourself with margin or doing anything stupid that's going to wreck your account. Just make sure that, again, just keep it simple, find good companies, spend a lot of time understanding what's going on with those. And if you can, DCA in on any drops. And if you can time things really well where you got a little extra money and you see a 20% drawdown on some of your favorite stocks or 30 or 40 like Iron, take those opportunities and enjoy them and buy these things for the long term. And I think we're going to do better. All right. Peace out, guys. I love you. And I will talk to you next week. Otherwise, you can find